Okay, now what was that question again?
Yeah. So I wanted to know the difference between a propulsion block and a breaker.
Okay, yeah. Okay, that's actually a that's a pretty detailed question. Okay, perfect. Okay, so now with the propulsion block, I know what it is, but I don't necessarily look for it or see it all the time when I'm in the charts. It's something
Okay.
that it's something that I'm still trying to remember because he has so many tools. But I do know the propulsion block is, and I do know what it means. So so basically, right there where your cursor is, where's the propulsion block at? Now, what is a propulsion block? The propulsion block is when you have a down closed candle, and then you have a order block, and then you have a order block that closes into an order block. That's what a
mm,
propulsion block is. So, where would you say the propulsion block is right there on that on an order block right there, the last down closed candle? Where would you say the propulsion block is? Just off the top of your head, there's two of them.
this,
Right. So the first one is what? That one right there where your cursor is.
yeah,
Because if you look at the low, it closed, it wicked below the low, but it never took the low. So
yeah,
basically, what I understand is that a propulsion block is when a down closed candle closes inside another down closed candle, and it's like a bullish sign. And so I don't know the ins and outs of it. I have watched multiple videos about propulsion block. I don't necessarily know like exactly what it means, but I do know the definition of it.
okay.
So yeah, I do know the definition of it, but it's not something I necessarily look for in the charts. I'm not saying I'm not. I mean, maybe I should, but I don't know like the ins and outs of it. I just know it's like I guess it's like a bullish sign because I do know the ICT said that it shouldn't close below mean threshold. Now I do have notes on propulsion block, so let me actually look it up on my phone.
Okay.
And that's what I would recommend, like for you to have like a folder on your Google Drive or somewhere where you have where you have all ICT's notes. And I'll show you what I mean by that. So, and then I'll show you what the breaker means because I use that all the time. So I totally know what the breaker is. But let me go to the propulsion block and see if I go to my notes and see if I can answer more on that question. I think I have a folder on propulsion block. Hold on, quick.
Okay.
See, on my folders, I have something called ICT, Institutional Market Structure. And then I have all his stuff in. I have FSMT divergence. I have candlesticks. I have all his stuff. And then when I watch his videos, I screenshot and I take a screenshot of what he's talking about, and then I save it in this folder. So if I want to refer back to it, I can through screenshots. Hold on, quick.
Mm.
I recently took some screenshots about the propulsion block, but I know from off the top of my head, he said that you don't want to see it close below mean threshold.
Yeah.
And what's mean threshold?
Mean threshold is 50% of
Of the
another block.
Yeah, the body. Yeah, 50% of the body.
Yeah.
Hold on, let me just search for some notes that I took on propulsion block. See if I can just quickly find it. Hold on.
Okay.
I took it like a few weeks ago, and I got so many notes in this phone. Uh, I'll just send that to you in my
Okay.
own spare time. But now, what was the other one you said? The bullish breaker or breaker?
The breaker.
Yeah,
The
yeah. So the way this stuff works is the breakers, the bullish. You got bullish breakers and you got the bearish breakers. Like I said, I study this stuff immensely because if I can't see, if I can't see these concepts correctly, I'm not going to make money. This is not going to work. And so this is how you got to think about this stuff. It's like, you know, if you can't see price correctly the way he teach it, man, it's just never going to work. So as far as the breaker, let's see, go back to that DXY chart.
mhm.
Hold on. You trade GJ, right? I guess we can stay on GJ.
Yeah. G.
Okay, so zoom out, zoom out. Go down to the 1 hour chart and zoom out. Okay, now scale up. Make it look like pencils, and then zoom out and scale out. Okay, right there, right there. Okay, right there, right there. Now, I actually love this concept, man, because this is how we can predict price. Like I was looking at other people's videos, and they're like, "You got to react to price." Now, ICT said that's bullshit. ICT said if you're not trying to predict where price is going, what the hell are you doing?
Yeah.
Like we're absolutely predicting where price is going. See, that's why I love his concepts, man, because everybody else like, oh, it's random and you can't predict where price is going. I got multiple videos of me predicting exactly where price is going, and I don't know shit about the stock or anything because I understand the structure. So now, if you look at where your cursor is right now, look to the right. Where's the bearish breaker at? This is going to be a lot of fun for me because I like breaking this down. So where's the bearish breaker at? Just off the top of your head, where would you see? Because you got bearish breakers and then you got bullish breakers, right?
Yeah.
Okay. So this is a very, very clear bearish breaker that we have right here. So where would you say it's at right now?
This volume, this candle with much volume, I'm not
The
mistaken.
breaker, the bearish breaker is one candle. So where would you say the breaker is? The bearish breaker. Okay, hold on. Now where your cursor is all the way to the right where price, where's the bearish order block at? Go ahead and mark that up. Go ahead and mark that up. Where's the bearish order block at?
The bearish order block,
From your cursor where it is right now all the way to the right, where's the most accurate bearish order block at? Go
bearish
where is it? But what is a bearish order block?
bearish order block is
The last up close candle
the last up close candle.
before the down move. Now it's a lot deeper than that because actually a bearish order block is the last up close candle that actually created a gap, and it has to take out a low. It has to take out a low and create a fair value gap. That's the actual definition of the order block. It's not just the last up close candle because somebody may see this in the future and be like, "Oh, that dude don't know what he's talking about." I absolutely know what I'm talking about when it comes to ICT shit. Absolutely. So go ahead and identify that order block and mark it up. Mark up the how do you mark up an order block? Where is it though?
The open and the low.
Yeah. So where is it though? Where's the last up close candle at?
Is it this one? This?
Nope. That's not it.
Nope. Ah,
Look that now. Look at the closing price. Look at the closing. Where's the closing price on that candle?
the closing price on this. I mean this green candle, this bullish
No, no.
candle.
Where's the closing price on that order on what you just said was order block? Where is it?
Let me zoom in and show you.
Yeah. Where's the closing price at?
Yeah,
Okay.
above.
Okay. So remember, order block is the last up close candle. So what candle close higher than that?
Ah, the last up close candle does not have to be bullish or bearish.
It has to be the last up close candle. So what
Okay.
you just showed me a candle that closed. You just showed me a closing price. So I'm asking you if a bearish order block is the last up close candle, then what candle closed higher than that? Boom.
This
Boom.
candle.
Boom. Exactly. Exactly. That's the order block right there. Go ahead and mark it up.
Okay.
Go ahead and
Okay.
mark it up. Mark the zone up. Yeah, and remember we're gonna label that red as well after you mark it up. So yeah, go ahead and drag it all the way to the right.
Ah, I see. Okay. Mm.
Mark it up properly. You got to zoom in. Mark it up properly, and you have to label it red because it's a bearish order block, and you got it green. Yeah, go ahead and put it on the open and the low. Exactly. Boom. And go ahead and label it red and mark it up dash negative OB, negative OB, negative OB. You got BO.
Mm. Sorry.
So put negative order block, negative OB, and then put 4 hour because it's a 4 hour. Now I don't know what color you use for the four. You have
Mm.
to color coordinate this stuff. That's
It's
why when
one
you
hour.
that's why when you first I use green for 4 hour, but you can use whatever color you want. But when I first saw your video, I was like, he's not color coordinating stuff because when you go down to the 5 minute chart, when you go down to the 1 hour chart, you have to know, you have to visualize the higher time frame order blocks and breakers.
Okay.
So yeah, that's if you watch the first video we did. Also, I was saying you have to visualize the stuff you're marking up when you go down to the lower time frame. So this is a 4 hour chart, isn't it, or is it the 1 hour chart?
It's a 1 hour chat.
Oh, so the 1 hour I used gold. I don't know what color you use for the 1 hour, but you got to come up with a color for each time frame. So because look, the way I do it, because like I said, I used to mark up the order blocks, the zone. I used to mark it up as a like as a gold color because I use gold. So what color are you gonna use for the 1 hour? I use like an orange gold color.
I'll use gold.
Okay.
Gold.
Yeah,
Gold.
go ahead and change that to gold. That no, the background is still gonna be the background has to be red. Change it to red because it's order block. Because remember, when price is coming up to it, the red is letting us know like this is gonna stop. So that's why we use red. Yeah, go ahead and make that red because you got it on green. You got to make it red. Boom. Now go ahead and the text needs to be gold. You may have to create your own gold color. Go ahead and click on um, yeah. You may have to create your own gold color. So try to like find the gold. Yeah, and like an orange goldish color. Yeah, yeah, right there, and pull it all the way to the right. Yeah, and click on add. Boom. That's perfect. Yeah. So now you got a bear. Now put zone, bearish order block zone. Now when you put the zone, when you see the word zone, what does that mean? If you watch the first video a few times.
Zone means it's not a particular area or it's
Yeah. Now this is very important because when you have to mark it up a certain way, man. Because I'm telling you, like if you don't do this, like you're gonna come back to the chart and you can be like, well, what do these lines mean? Like you have to know, like, look, when you see the word zone, you have to instantly think of three price points. You just can't say bearish order block because you if you just say bearish order block, that means that you're just putting price on the opening price of that candle. When you say zone, then that means in your mind you have to automatically think of three areas on the order block. And what are those three areas?
they open the low and the main check.
Nah, actually, no. It's four areas to the order block. Yeah, but when we talking about zones, you got to immediately think about the low on a bearish order block. You got to think about the low and what's the middle area?
The yes,
Encroachment. Yeah,
the
consequent
sequence
encroachment, and then what's the area above that? The opening price.
they open.
That's why I'm saying zone because when you're down on a 5 minute chart, in your mind you have to think like, okay, well, price may reverse off the low, or it may reverse off 50% of this zone that I just marked up.
Okay.
So you got to see like what price. If price still look like it want to keep pushing past the low, you're like, okay, well, the next area. Let's say you got three positions on. You may take the first position off at the low, and then it may keep want to go higher. You're like, okay, well, I don't know if it want to come up to that opening price, even though price wants to do that all the time. But I'm not going to bet on that. I'm going to bet on it going to what consequent encroachment.
Okay.
And then if it keep going past consequent encroachment, you got three positions on. You just took two off. You're like, you know what? I'm just going to take the last one off at the opening price because you don't know if it's going to go up the mean threshold. That mean threshold could be a long way away because remember it's 50% of the body. So we're gonna go ahead and take that last position off at the opening price. And if it keep going higher, then we just have to wait and analyze and see what we're going to do after that. Okay,
Okay.
so zoom back out. This is a bearish order block zone. Can you make that a little more red? Can you make that a little more red? That area? Yeah. Can you lighten it up a little? Yeah.
Mm.
Okay. This is a perfect example of now. Go ahead and mark up mean threshold as well. That's going to be a dotted line too, by the way. Yeah. Nope, that's constant encroachment. Macro mean threshold.
Okay.
Hold on. Wait. You gotta move that box perfectly. You gotta move that box perfectly to the opening price. Yeah, right there, and then so now you got to move it down a little bit to the low. I'm telling you, because when you're on a 1 minute chart, this stuff is important because price literally will reverse right off of the low sometimes. And so if you don't have it marked up correctly, you're gonna think it's gonna continue to go higher, and then you're not gonna make as much. So go ahead and mark up mean threshold.
Threshold.
I'm about to show you something real quick. Nope, 50% of the body.
Okay.
So you may have to zoom in. 50% of that order block's body. That's mean threshold. What you doing? Oh,
Want to zoom
yeah. You may just have to pull out another fib, so you don't have to
Yeah.
zoom back out. Yeah, and drag it all the way to the right. Yeah. All right. Now you got to get a trend line and put it on the 50% of that and draw it out. Yeah, just pull it over and then hold down shift, and then that should make it straight once you get to where you want to go. Drag it all the way over. I'm about to show you something real important. Drag it all the way over. Now, go ahead and label that mean threshold. You can make the line dashed. You can make it like a dash line, and then label it mean threshold. Negative OB MT 1 hour. So negative OB MT, and then you put 1 hour so we can know. And then you got to label it. You got to color coordinate it. You got to put it on 1 hour. Yeah, you got to put the color as 1 hour color.
Okay. Leave it.
Exactly. Let me show you something. Go ahead and yeah, put it on 1. Put the thickness on 1. It shouldn't be on 2. Yeah. I'm about to show you something. Go ahead and type in 4H. Now we're about to show you time frame correlation. This is why you should always go. Is this a 1 hour or is this a 4 hour?
This is a 1 hour.
Okay, type in 4H because we're about to see how the order block looks on the 4 hour chart. We just marked it up on a 1 hour chart perfectly, right?
Yeah.
See, now go ahead and type in 4H. Okay. So now you see the higher time frame order block is always going to the higher time frame order block is always going to. We're gonna talk about the breaker. Trust me, we're gonna get to it. I'm just trying to show you something. So what would you do now since the higher time frame order block is showing you something different than a 1 hour? Remember, price is going to respect the 1 hour order block over. I mean, the 4 hour order block over the 1 hour, right? Because it's a higher time frame. So
Yeah.
now, what do we need to do? Since we just marked up the 1 hour, we know price is not going to respect these lines that you just drew up 100%. It may respect it, but it may go higher or lower based off the higher time frame. So what do we need to do now? First, we need to delete that first Fibonacci. We need to delete that one. Yeah, delete that one right there. Yeah. So we have the 1 hour order block. No, you could leave it on there. Leave that one on there because we're going to have to use it again.
Okay.
Hold on. Click on that Fibonacci again. Double click on it because those numbers are way too big. It's kind of distracting a little bit. Scroll down. We need to take that. Double click on it again. Yeah, we need to bring that font down. We need to put that font on. Scroll down. Yeah, put it on a 10. Just look way too big. Yeah. All right. So what do we need to do now? So we have the 1 hour order block marked up perfectly, but remember, price is going to respect the higher time frame order block.
Yeah.
Even though it's going to respect that 1 hour order block, but it's really going to move based off the higher time frame. So what do we need to do right now? Since we have a higher time frame order block, and now we got a lower time frame order block. What we need to do now?
We just delete the 1 hour and continue with the 4 hour.
You said what?
We just continue directly with the 4 hour. We can delete this
Well,
of the 1 hour and head on the 4 hour.
yeah. What we need to do is we need to mark up the 4 hour order block. That's what we need to do.
Yes.
So so what you could do is in this situation you could leave the 1 hour order block on there because price will respect it, but that don't mean it's going to stop on a dime at the lower time frame. So you could leave it on there, or you could just you need to what I would do is I would just remark up the whole 4 hour order block and say the hell with the 1 hour order block. I'm going to mark up the 4 hour order block because price is going to respect that one more. So so since you need to remark up the order block now, the higher time frame, so what are you going to do now? What are you doing?
The
So
other block.
no, that's not an order block. That's not a
Ah,
bear. That's not the bearish order block. So remember the way I taught you how to do it the first time on the first video. Remember with the date and range with the three lines.
okay, yeah.
Look, listen. You got a long wick right there. You see the light. Where's the order block at? Where's the order block? The bullish order block. Where's the candle at?
The last up, please.
Nope. It's the last up close candle, not the last up close bullish candle. Because remember, you just clicked on it. You just showed
Oh,
me.
yeah, yeah, yeah.
Yeah, that's the
Yeah,
order block.
yeah,
So remember. So
yeah,
look, you see that long wick right there?
yeah.
See that right there? Your antennas, your spidey senses should always go up when you see long wicks, because the wicks are going
Mm,
to tell you everything. So now you got to mark that order block up the way that I showed you how to do it last time.
okay,
So go ahead and delete those two mean thresholds, and then mark it up the way I showed you how to do it last time with those three lines. It's called date, time, and price. You have to find it. You have to find you have to find it over there in your drawing tools. Because when you have a long wick like that, I mean, hold on, listen. It's however you want to do it. You can use the same zone, the little red zone, and you can just put your cursor at 50%. So it's however you want to do it. That's just the way I do it. I put the three lines on there. So if you don't want to do it like that, just drag the little red zone down and then label it
yeah.
4 hour.
This way is preferable.
Yeah, just
Using okay.
it's however you want to do it. I mean, because remember the way I'm showing you how to do it, it shows you where consequent encroachment is on a dime. But if you
Yeah.
just use the red zone, you're going to have to manually see where consequent encroachment is. So it's like whatever works for you, whatever floats your boat. You know. Yeah, drag it all the way out. A little bit, one more. Right there. So this is a bearish order block. So where would you put that at?
Put come again the
So
question.
where would you put that zone that you just drew? Where would you put it at? Since that's a bearish order block, where would you put it at? Because where you just put it at is incorrect.
It's incorrect.
Yeah, you have to put that on the bearish order block.
Bearish other block.
Yeah. So
Open.
what are the three sensitive areas? This is a zone you're drawing. So what are the three sensitive areas on the
Ah,
bearish order block? The low, consequent encroachment, and then what? The opening price.
yeah.
So go ahead and delete that 1 hour zone. It is important, but to me, it's not that important because price is not going to respect that order block. It's going to respect the 4 hour order block. I mean, it's going to, it's going to reverse off of certain areas on a 1 hour one, but the higher time frame tells you the true story. Okay, you're going to have to zoom in and make sure those lines are perfectly on there. So go ahead and zoom in and make sure, yeah, yeah. So,
Yeah.
I mean, in your own time, like in your spare time, you really going to have to make sure those lines are perfectly on there because you'll see if you just eyeball it, you'll see how that's going to mess you up in the future. So, like when I'm doing it, I'm making sure everything is spot on, dead perfect because none of this stuff is random whatsoever. Now
Yeah.
go ahead and mark up mean threshold of the bearish order block. Go ahead and mark up mean threshold. Hold on. Look at the top of that candle. It's not on there perfectly. See that?
Yeah,
The
that's
line. I mean, even just eyeballing, it's not on there perfectly. So you mean threshold? I'm telling you, like if you really start taking this stuff serious, you're gonna see that this stuff is. You have to be extremely accurate because when you go down to the 1 hour chart, I mean a 1 minute chart, you'll see price literally reversing right off of the 50%. I mean, it's like crazy. Just like ICT saying in his videos, it's scary. It's insanely accurate. Okay, so delete the that Fibonacci. Okay, so now we got mean threshold. Go ahead and draw it all the way out. Yeah, all the way out to the end of that zone. Yeah, and then label it mean threshold 4 hour bearish order block. Go ahead and hold down shift because it's bent. You have your line is bent. Yeah, you have it's bent. So go to the end of the line, click on the circle at the end, and hold down shift, and it should make it a perfect line. Yeah, go ahead and move it, and then hold down shift, and it should make it perfect. Hold down shift. Yeah. Okay. It's still bent, so I don't know if you held down shift. I'm just trying to make sure you know
yeah,
that you can it shift that make things a lot easier for you. All you got to do is just move it to where you want, and then hold down shift, and it should make it. It should
yeah.
automatically make it a straight line.
It's okay, I think.
Are you holding down shift?
Yeah,
You don't have a physical mouse, do you? You're using the mouse on your computer, right?
yeah. I'm using the mouse pad.
Yeah. See, that's why you messing up. You're gonna have to go on Amazon and order an actual mouse because that's why you messing up. Because I'm like, what's going on with this dude? Yeah, it's because you're using a mouse on your actual computer versus a physical mouse in your hand. So,
Yeah,
all right. So go ahead and label that negative OB mean threshold, and then put 4 hour. And I use green for 4 hour. So you could just use green until you want to change it to another color in the future. Exactly. And then label that zone, negative OB, 4 hour zone. Because remember, when you say zone, like I said, I didn't see anybody on YouTube shooting videos like this. I just kind of came up with it because it just kind of makes sense. It's like if it's a zone, then I'm automatically thinking like, okay, there's 3 areas that's sensitive. So now, based off of what GJ is doing, no, this is GU. Okay, I think GU and GJ is supposed to move the same, but um, so now we have targets. See, price may reverse. See how price hit that candle, that low, and
yeah,
then now it's turning into a red candle.
yeah,
That's because the low is very sensitive. Now remember the low on the 1 hour was way up there. Remember, the low on the 1 hour was way up higher.
yeah. It was higher.
So you may be like, okay, well, so if you don't mark up the higher time frame, you think price is gonna go up to that bearish order block on a 1 hour chart, you're gonna be looking like a fool. That's also I'm trying to show you that the higher time frame is showing you everything. So now I'm about to take you to. We're gonna get to the breaker. I just want to show you something. Now go
Okay,
ahead and click on 1D. Click on 1D. Just trying to show you the power of the higher time frame with this ICT shit. Okay, so look now. Click on take off the annotations. Click on the little eye in the left hand corner. Click on the little eye so we can everything can disappear.
mm-hmm.
Right there where it says trading view. The little eye. That's how you get everything to disappear.
Yeah,
Right there. So listen. So now we don't see a bearish order block per se. I mean, it is an order block right there in a way because listen, this is how it works. Once price goes below the opening price, it is officially an order block. That's how ICT teaches it. So this is actually an order block, but um, when you see something like this, you don't have an order block to really mark up. So you have to know the next time frame down is the proper time frame to use. Does that make sense?
mm, Yeah, it makes
What
sense.
I'm trying to say is you have to continue, you have to keep going up to the higher time frame, the higher time frame, the higher time frame until you see some shit like this where you can't
Okay.
see an order block. And so this lets you know, like, okay, well, the most valid order block where price is going to respect is the one below. So this lets you know that most likely it's probably going to respect the 4 hour chart. Now remember, you have the free version on TradingView, so we can't go to the 8 hour chart or the 16 hour chart. See what I'm saying? Because usually, if you had the other version, I would say go to the 8 hour chart. You'll see the order block look different on the 8 hour chart and the 16 hour chart.
Okay.
In the 20 hour chart. Okay, so go back down to the type in, click on the eyeball again, so your annotations can pop back up, and then click on 4H, so we can go back down to the 4 hour chart. Okay, so this is the most accurate order block. So now go back down to the 1 hour chart. Now we're about to talk about the breakers. And this is fun. This is gonna be fun talking about these breakers because these breakers is no joke, man. Like if you now you when you listen back to this video, you have to listen to ICT's PD array matrix. I have all of his videos in a category as well. It's something
Okay.
called a PD array matrix. So it's the price delivery algorithm matrix. So
Okay.
the way the breaker works is if it's a break, man, the breakers are powerful because the breakers is going to stop price dead in its tracks. So if it's a breaker and you see an order block, price probably won't make it up to the uh, the order block's opening price because the breaker is going to stop it. It's going to stop it dead in its tracks. Go ahead and delete that. Go ahead and make your screen full. Make your screen full because I don't like the way your screen looks. Click on the, yeah, click on that. Let's make the screen full. Okay, cool. So go ahead and delete that Fibonacci right there. Okay, so based off of what you learned so far, what would you say? Pull the screen down a little bit because we got to see all the price, even the wicks. Yeah, pull the screen down. We got it because that wick is okay right there. Now go ahead and scroll it to the right a little bit. Scroll it to the right because yeah, scale it to the right. I'm sorry. Yeah,
No
scale it to the
problem.
right. Yeah, because yeah, 'cause you when you kind of like trying to figure out how this stuff works, you want to make sure you scale in it to the right. But this is perfect. Now, what would you say the breaker is based off of what you know so far? I'm not saying you know you should know where it's at, but what would you say is probably at?
I think this should be the level.
What would you say the bearish breaker is?
Yeah.
Nope.
What of this?
No, listen. The breaker is the last down close candle before it took out an up move. Okay. So that's why I'm saying this stuff is confusing to some people. And it is a mind fuck a little bit, but you will have your matrix moment if you just keep watching ICT videos versus watching television. So the breaker is the last down close candle before it took out the up moves, the two highs. So look to the left. Where are the two highs at? Listen, before price actually made that low and make that those two big red candles, where were the two highs before that?
The two highs. This high and this high.
Yeah, that high. No, I'm sorry. The two highs before that high right there. Where are the two highs at before that high right there?
Before this high,
Yeah, before that high, where are the next two highs to the left?
this high.
Okay, and where's the other one at? Where's the
These
next one
two
at?
these two highs.
It's another high. If you go to the left, it's another high.
This and
Right
this.
there, right there. Listen, right there. So listen, the bearish order block is the last down close candle before it took out the last high. It's like a V. It's like a V. It's the last down close candle before it took out the high before it started making lows. Right.
Okay. Yeah.
So and we have a swing high right there as well. But the swing highs is a whole nother teaching. So listen, it's the last down close candle before it took out the high. Okay, remember, look, price was going up, right? You
Yeah.
see that it kept making highs and making highs and making highs, and then it started going lower, right?
Yeah.
So where's the bearish breaker at? It's the last down close candle. It's the last candle before the up move was taken, before the previous high was taken out. So listen, you got a high, and then you got a higher high, and then prices just start shooting down, right?
Yeah.
Okay, so where's the breaker at? It's the last down close candle before it took out the up move I mean, I'm sorry, before it took out the up high, the higher high. Okay, the
Mm-hmm.
breaker is right there, man. That long wick right there. That's the breaker. That's the
This
breaker right there. Why is that the breaker?
because it's the last down close candle before this high was taken.
Exactly. Now go ahead and draw a V right there.
V.
Yeah, go ahead and draw a V. This is how I visualize. Draw a V. Get the drawing tools and just draw a little V right there. This is a perfect breaker right there. It's a beautiful breaker. We may have to go down to a lower time frame because so get the drawing tool and draw a V right there. Or you can click on the line chart and you should be able to see. Just click on the line chart. You should be able to see a V. Well, I don't think you'll be able to. Yeah, you got to pull your annotations back up. Click on ES Scott, EC, Click on that because that should bring back your chart back. Yeah. So click on line chart instead of a candle. See where it says 1 hour up there? Click on the candles and then click on line chart. Well, that's not too cool. Click it back on candles. Click back on candles. Yeah, click back on candles. Okay, now go ahead and click on the eyes. I want to turn off the annotations real quick. So this is the 4. This is the 1 hour chart. Now
Yeah.
go down to the 15-minute chart. The breaker may look a little better on the 15-minute chart. I'll scale it to the right. Yeah, it looks a little bit better. So basically, the bearish breaker, man, is the last down close candle before the up move, before the up high was taken.
Mm-hmm.
So now you need to mark up the breaker. The breaker is the whole candle. So it's the same 3 areas. So you don't have to use the 3 lines with the breaker. You could just use the whole zone, but just know that the sensitive areas is the low 50% and the high. So
Okay.
basically the way this works is if you're on the 15-minute chart and above, price should not go above this breaker if it's truly bearish. This shit
Yeah.
is so powerful, man. You see why it's a breaker though? Because it's the last down close candle before that high was taken out. The
Yeah.
last high, and then before it started making lows. But basically it's like a little V. This is how you gotta remember it. It's like a V.
Oh, like yeah, V like this.
It's like a V. Yeah, and we're gonna find another breaker too, because we haven't really talked about breakers. So we're gonna find another bearish breaker and see if you can identify it. So go ahead and mark up the whole candle. So turn back on the annotations. Yeah, as soon as you click on it, it's gonna automatically pop back up the annotations. Yeah. Yeah, now
Oh,
scroll it all the way to the right. All the way, all the way. Okay. So now you got to put it on that red candle because that's the last down close candle. Now remember, in the future, when you're gonna see a lot of wicks in the future. So it's not the last down close candle low, it's the last down close candle body. It's the body that's the breaker, not the wick. And so I'll show you what that means. This is very important because you have to mark it up properly, and then you'll see all the stuff you see people so fascinated about ICT stuff. You'll see why we so fascinated because the shit is like extremely accurate. Okay, so go ahead and label that. We need to make that area. We need to make it. Go ahead and double click on it. We need to make it a different color red. So put a bearish breaker. Just type in bearish breaker on text. In the 15-minute, I use turquoise. So like I said, you can use turquoise until you want to use a different color just to speed things up. So double click on just type in bearish breaker. Bearish breaker, 15-minute. Just put 15-minute. Yeah. You can put a small M. Yeah, just so, because this is lower time frame stuff. Yeah.
small M.
Yeah, small M. And then put turquoise as the color. On the 15-minute chart, like I said, you could change it to another color, but just put turquoise, which is right next to that purple up there.
This or this.
To the right, to the left.
This.
One more, right there. All right, so hold on, bottom right. Okay, cool. Now go ahead and click on style. Click on style because with the breakers, I want to make it a different red. Click on that background. I want to distinguish this from the bearish order block. Does that make sense? I don't want to make it the same red because the breaker and the order block is two different things. So go ahead and click on a lighter red. You see those lighter reds right there next to the yellows? Go down.
Next to
Go
the
go go
yellows.
go go to the left. Go to the left with the colors. Yeah, now right there, right there. Yeah, that one. You see how it's a
Okay.
different red now?
Yeah, yeah.
So I'm not
Yes.
saying you have to use that red, but all I'm saying is I would I would use this idea because if you use red and now you got another order block that's red, you're gonna get confused. So you have to have a color for the breakers. Does that make sense? Like you can make a red color, but it needs to be a different red than the order blocks. Does that make sense?
Yeah, it makes sense.
Because you don't want to get confused. Like, okay, well, is this a breaker or order block? Like, I mean, yeah, you can see that it will be labeled that, but the colors is going color coordination is gonna help you out. So
Exactly.
so go ahead and make the that red a little lighter. We want to see it, but barely see it because we still need to see the candles. Yeah, like right there. Boom. Now go ahead and zoom out. So now this is telling you a story. So listen. So now we got a bearish order block zone, higher time frame, 4 hour, and we have a bearish breaker. Now the way it works is the way ICT teach it is go back to the 4 hour chart. Type in 4H. Okay, now zoom back, scale out. Okay, so I'm sorry. Type in a 1 hour chart. Sorry, 1H. Yeah, go back to the 1H. Yeah. Okay, so now we have the bearish order block. We have a bearish breaker marked up. Now the way it works is if you see a breaker, man, and you see a bearish order block, most likely price is not going to let it. The breaker is extremely powerful. That's why you really need to understand how to mark it up because usually price wants to come back up to bearish order blocks open in price, right?
Yeah.
Like it wants to come up to that low consequent encroachment, but definitely it wants to come up to that opening price or mean threshold sometimes. So instead of thinking like, okay, well, I wonder if it's going to go higher. If you see a breaker, most likely it's not going to go higher. It's how
Okay.
ICT teach it. Most likely it's not going to come up to that opening price because it's stopping. It's like a freight train. To be honest with you, I'm trading GJ right now, and I think both of these move the same. And I'm actually in a short, long term on GJ right now, and I have a very detailed reason why with the kind of
Okay.
research I do. But so that's the breaker, man, and that's the order block. I showed you the higher time frame. So let's go ahead and find another one. So keep scrolling to the right. So go ahead and crunch it up like pencils. Go ahead and scale it to pencils. Yeah, and then keep scrolling to the right and see if you can find another bearish order block. Now let's do the bullish order block this time. So keep going to the right. I'm sorry, let's do a bullish order block and a bullish breaker. As far as the propulsion block and all that, I mean, I'm still trying to figure out how to use that. I just know what the definition is. Because so let's find a bullish. Hold on, keep scroll back to the right. Scroll back to the right. I think you just passed over a bullish breaker and order block. Scroll back to the right.
You're right.
I mean, scroll back to the left slowly. Do it slowly, yeah, so I can see. Keep going, keep going, keep going, keep going. Right there. Uh, okay. Uh, see, we on a 1 hour chart. Oh, okay, yeah, yeah. Okay, yeah, I see it. Okay, I see it. Okay, so now we're about to mark up the bullish order block, and then we're gonna find a breaker. So let's do it the same way. Okay, so where would you say since you're on the lower time frame, this is how you should do it. Go ahead and find a vertical line. This is how you should do it to help yourself out. Go ahead and find a vertical line. Okay, yeah, find a vertical line. Now, since you're on the lower time frame, where's the lowest down close candle at? I'm about to show you how to easily find the bearish order block, so you won't be confused.
This one.
Where's the lowest down close candle at?
This.
Right there. So put the vertical line right there. Now go ahead and make it lighter so you can see it because you got it too dark. Yeah, click on style and make it just lighten it up so we can see the candle. I'm about to show you how to find the bearish order. So now we're on a 1 hour time frame, right?
Yeah, 1 hour.
Okay, so what do we need to do now to find the real order block? What do we need to do to find the real order block? Because remember, we're on a 1 hour chart,
Need
so
to
we could find
to
an order
go.
block. We could find the order block on a 1 hour chart, but remember, it's not going to hold as much weight as the higher time frame. So what do you need to do right now? You just
We move on to
you just
higher time.
identified. Yeah, you just identified what a where a bearish order block is on a 1 hour chart. So what do you need to do right now?
Move on to a higher time frame.
Okay, so which one?
Maybe the 4 hour.
Exactly, the 4 hour. So go to the 4 hour and see what it's looking like. And see, that's why I said put that line on there so you won't be confused as to where you were. So the
Okay.
line is going to show you where you were. Yeah. Boom. See? Now zoom in. I'm about to show you something. This is really good right here. Zoom in. This is really good right here. Now, yeah, exactly. Now remember, the bearish order block is the last down close candle, right?
Yeah.
See, this is why you can't go on a 1 hour chart. It's nothing wrong with finding order blocks on a 1 hour chart, but what I'm saying is you always have to find a higher time frame. So look, listen. So what is this telling you right now? Remember, that line right there is the bearish order block on a 1 hour chart. That was the lowest down close candle, right?
Yeah, exactly.
Okay, but what do you see right now?
There's a one that is lower than this.
Thank you. Thank you. That's what I'm trying to tell you. Like you have to go to the higher time frame because basically you would have marked up the wrong damn order block. Not really.
Yeah.
It wouldn't have been the wrong one, but so now what you have to do is pull your cursor over to the accurate order block on a higher time frame, which is the one two two, the other red one. So go ahead and move it over.
This
Yeah, go ahead and move it to the proper order block.
this
Where's the
one.
real order block at? Nope,
This one.
nope, that's not it.
This
The order block is the lowest down close candle. Remember,
the lowest down close.
where's the closing price on that red candle? Where's the closing price? Point it out. Where's the closing price at?
Open.
Point to it. Where's the closing price at on a red candle? Where is it?
This is it.
Okay, so the order block is the lowest down close candle, right?
Yeah, the lowest
Okay.
down.
Okay, so where's the order block at then?
Okay, the other block.
Where is it? Where is the lowest? That's not the order block. I'm telling you right, it's not it. So if it's the lowest down close candle and you just showed me the closing price, then where's the lowest closing price at?
This one.
That's higher than the one you just clicked on. Where's the order block at? It's the lowest down close candle, remember? Thank you.
This.
Thank you.
Yeah.
Okay,
Okay.
so now we're not done yet. See, this is how I do it, man. I ain't got time to be playing around with these fucking
Mm,
markets. Like, so I need to know exactly what's going on. So now it's not good enough. We're on a 4 hour chart. Now we need to go up to the higher time frame to see if we can find an even stronger order block. Because remember, the higher time frame is multiple candles stacked up into each other. So now we need to go
mm,
to what's the next time frame we need to go to see if we can find another order block even more stronger.
daily.
Yeah, go to the daily. 1D. And go back and find out where you were. Okay. Okay, so now we got that order block. So now let's go ahead and mark up the zone. So you have to get the date and time thing and then pull it all the way to the right. And then we're gonna go down to the 4 hour chart after this and see. And so you want to mark up the zones of these order blocks. Nope, that's not an order. That's not a bullish order block.
Bullish. Okay.
Yeah, that's not a bullish order block. It's the high. It's the exact opposite of
Yeah,
the
yeah.
bearish order block. It's the high in opening price, and the bearish order block is the low in opening price. Nope, that's not a bullish order block.
You know this.
It's the last down close candle zone. Exactly, right there. So then make it pull it all the way to the right. I'm sorry, to the left.
To the
Yeah,
left.
yeah. I'll tell you when to stop. Right there. Pull it left, 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 left. Right there. All right. So we need to zoom in and we need to put it on the high and the opening price, and then we need to make that box green. Yeah. Let's make it green. OB, you got BO.
Oh,
Yeah, bearish OB. Yeah, one day. And put zone. Because if you put order block, usually, like, because what's going to happen if you don't do it like this, you're going to watch ICT's videos and you're going to see him. See, ICT don't do it like this. He just, when he say order block, he means opening price. That's why the way he do it is order block. His order block is opening price. He don't necessarily mark up constant encroachment all the time or the high and the low, but it is important to know. So yeah, because when you say zone, automatically you think, okay, it's 3 points. That's sensitive. Now, okay. So now we got the zone. Now, hold on, we got a color coordinator. So what's the color for daily? It's red. So you in like yeah, you have the color coordinated because we on a lower time frame. No, you got it. You marked it up wrong. Yeah, make that red, and then go and then make the font 10. Put on the 10 font, and then go back and color that line back to green because you got it red now. Yeah, on style. Okay, yeah, it's
yes.
back green. Cool. All right, so now let's go down to the 4 hour chart. We hold on. Wait. Before you do that, zoom in and make sure those lines are perfectly on there because when we go down to the 4 hour chart, it's going to mean something. Like, yeah, just make sure it's on there perfectly. Okay.
Yeah, I think so.
All right, cool. Now go down to 4 hour chart. I just want to show you now what you have to practice this because now you have the daily zone marked up. So now go to the bullish order block. We on the bearish order block. Go back to the bullish to the left somewhere. Okay. So listen. So now we have the lowest down close candle on a daily, and now you're starting to see like how it works. Um, all right. So zoom scale out a little bit. Now, if you actually look at this, price did respect the 4 hour order block. You see the last down close candle? You see it?
Yeah,
You see?
yeah.
So yeah. So actually, go back to the daily and mark up the mean threshold. I'm about to show you something. Back to the daily and mark up the mean threshold. So it's a little tedious. That's why if you could find like a indicator that actually can mark up the order block, well, I wouldn't say that because it's going to mark up every order block. Every down close candle, up close candle is not an order block. Um, so go ahead and put the Fibonacci on there and mark up that 50% of that body. And then let's go ahead and mark up mean threshold. And just see how it coordinates to the 4 hour time frame. So you can kind of see, because like ICT teach, like I could tell you something or he could tell you something in the video, but the way you really gonna get it is when you see it for yourself. Like when you really see for yourself that this stuff is true. Yeah. And get that trend line and put it on the middle and make it a dash line, turn it green, and we'll just do that mean threshold for the daily. Yeah, label it green and then drag it all the way out. And hold on, but hold on. You see that mean threshold? Mean threshold lines up with what?
Come again?
I say, you see the mean threshold right there? What does it line up with on the 4 hour chart?
On the 4 hour chart.
Yeah, the mean threshold. Hold on. Go back to, click on the mean threshold. And remember, you have to color coordinate it. So you got the colors wrong. You got to label it green. And then on the daily is red. So you got to, yeah, so label it green. And then go back to text and put red because that's what daily is. We're using red for daily. Yeah. So just put red. Okay. Now, listen. So this is the 4 hour. Where's the order block on the 4 hour chart at?
The other block on the
Yeah, where is it?
that's down close. This
Yeah, exactly. So what does the mean threshold line up with? The mean threshold on a daily, what does it line up with on the 4 hour chart? It lines up with the opening price. You see that?
oh yeah,
Delete that blue line.
this one.
That's what's crazy about this stuff. Yeah, delete that blue line. You see how the mean threshold on the daily lines up
Yeah.
exactly with the order block. That told you right there where price was going. That was a confluence. It's literally
Mm,
on the opening price exactly. So if you didn't know where price was going, you're like, okay, well, what's the confluence? Okay, on the daily mean threshold lines up perfectly with the last down close candle on the 4 hour chart. So maybe it wants to come exactly to the opening price. Go ahead and drag the mean threshold all the way to the right. Yeah, since you're using your cursor on your computer, it may be a little weird. So you see how price stopped. You see how it stopped right there. At first, it stopped literally on mean
yeah,
threshold in reverse.
yeah.
So that's what I'm trying to tell you. You got to see this stuff for yourself. Go ahead and drag it all the way back to where the red candle went down instead of dragging it to where you drug it all the way over. Drag it back to like right when it hit the red candle. Yeah, keep going. Yeah, about right there. Hold on, drag it a little bit to the right. Yeah, drag it to the right. Yeah, about right there. Yeah, exactly. Yeah, see if you can hold. Okay. So basically, this is mean threshold on the daily, and it lines up perfectly with the 4 hour last down close candle order block. So, and so now what we're going to do is find a bullish breaker. So go down to the 1 hour chart. We may have to go down to the 15 minute. So when you use the breakers, you don't use the little zone. Always use like a shaded color. Like always use the colors. And we're gonna use a different color for the breaker, and I'll show you which one. Okay, so you're gonna have to scale to the right and then zoom out a little bit. Right there. Okay, so listen. The breaker is the last up close candle before it took out a high. Okay, listen. Let me see how to explain this. I don't watch so many ICT's videos. I just listen, man. Before price started going higher, where's the low at before price started going higher? Like, okay, listen, price made a low somewhere, and then it just started going up and going up and going up and going. Where's the lowest low before price just started going up like crazy? The
This
lowest
one.
low. The lowest low. Where's the lowest low before price started going? Thank you. Where's the low? Thank you. So listen, the bullish breaker is the last up close candle before the lowest low was made. So where's the last up close candle? That's the lowest low, right?
Yeah.
Okay, so where's the highest up close candle then? Before it made that low. Before it made that low, where's the highest up close candle?
This.
Thank you. So now you need to get a green box and drag it out, and let's see what happens. Now you get a green box and drag it out. So the way it works is once price goes above this, once it pushes up strongly above this area that you're about to draw, we're going to be looking for to see what happens when price comes back down into it. Now listen. When you mark up the bearish breaker, you have to mark up the whole entire zone. So it's the high to the low. It's not the bodies and all that. So breakers and order blocks are different. This is a break. So why is this a breaker?
Because
It's
the
the
high
it's,
that caused the low was broken.
it's the highest high before the lowest low happened.
Yeah.
Yeah. And so then you have something called mitigation blocks, which is I can see why somebody could be confused with this shit. I mean, I've been listening. I've been watching it for so long. Okay, so let's go ahead and turn that to a different green. Double click on that and let's turn it to a. We're not going to turn it to the. Let's turn it to a different green. Go ahead. You see that green right above the yellow. Let's do that. Right above the yellow. See the plus sign at the bottom. You see that yellow box right there. Let's use that right there. Just use that green. Now go ahead and lighten it up a little bit. Okay, so go ahead and label that bullish breaker. So plus sign breaker 1 hour. So plus sign breaker 1H, and then put it as that orange gold color that you created. Exactly. And go ahead and drag it all the way out. And drag it out slowly. Okay, so price went above it, but listen, we're looking for a strong break above. So tell me what a strong break is. Keep going. Where's your strong break? Keep going to the right. Where's your strong break at? Hold on. Do you see a strong break above that breaker yet?
Yeah.
Exactly. So listen,
Yeah.
when you see a strong break, no, you got to put that green. You have to put that green box on the breaker. You don't have it on the bullish breaker. You got it on the red candle somewhere to the left. You got to put it on. You got to put it on that green, the last up close candle, the high and the low. Yeah. Okay. So listen, we're looking for a strong break above this area because when price comes back down, that's when we want to be a buyer. So go ahead and keep dragging it to the right since you see the strong break. Boom.
Is it
Keep going. Keep going to the right. Okay, stop right there. Now listen, listen, man. Where's the opening price on the bullish breaker on a daily chart? Where's the opening price at?
the mhm.
Remember, you have to visualize the last down close candle, and you have to understand the three areas. So we have the zone on the daily chart marked up, right?
Yeah.
Okay, so explain those three lines to me again. What do those three lines mean on that bullish breaker? I'm sorry, on that bullish order block. What do those three lines mean that you drew up in that zone? What is the
This is
top
the
line? What's the top line? What's that?
open.
Nope.
The open.
This is a bullish breaker. So what does the top line mean?
And the close.
What does the top line mean? This is a bullet. You have to visualize it in your head. What is a bullet? What's the top line mean on the bullish breaker? I'm sorry, on the bullish order block. Remember
The
those
high, the high, sorry, the high.
high exactly. So
Yeah.
what's the area in the middle?
The concentration.
Right, constant
No,
encroachment. And then what's the area? What's the last line at the bottom? What is that? What does that line mean?
the open.
Exactly. So listen, usually price wants to get down to the opening price or mean threshold before it reverses. So listen, you see the breakers. You see how the breakers stop price from getting down to the opening price of the
Yeah.
of the daily. You see that?
Yeah.
Actually, hold on. I'm sorry.
This one is
Hold on. No. I'm sorry. That actually that breaker no, because it's not official. It wasn't. See, I'm sorry. That's not true. What I just said because that zone that you just drew up, that green zone, that is not an official breaker until price goes above it. See, that's how it works. Like it's not a official bullish order block until price goes above the high. So what I just said wasn't true, but basically the whole point is that breaker right there. It you could be a buyer and see you could be a buyer all the way back up to the previous high, and that could be your trade right there. You see that? Okay, you see how price broke strong. What did price break strongly above the breaker? Where did it break strongly above the breaker at? Just point to it.
yeah.
Boom.
This
Okay, so
one.
now what are you doing? Let's say price all to everything to the right didn't happen. It's a blank screen. So price broke above there. So what are you doing now? What are you waiting on?
I'll wait for price to maybe come down. Because it's currently
Come back down into the breaker. Because remember,
yeah.
the breaker is not there for no reason. It's price is coming back into that breaker. You could be a buyer. Now go ahead and now click on 50% of that break. I'm about to show you something. Click on 50% of that breaker zone. No, I just put your cursor in between 50% of it. Now look at what price came down. You see when price
Yeah.
broke above it and it came back down, it hit what? Exactly 50% of the breaker.
Yeah.
It's just it's crazy, man.
Exactly.
It hit exactly that goes to show you because if it don't go past the 50%, that's a sign that it wants to go higher. So if you can go back, what would you have done? So you would have waited for price to break out of the breaker, right?
Yeah.
So tell me what you would have done. So price would have broke out of the breaker. Then what are you waiting on now? Since it broke out with strong price action, and you know it has to come back down into the breaker. What are you waiting on?
I'll be waiting for it to get down on the breaker. If should in case it passes the breaker, then the next one will be the open.
Right.
Or
So you waiting on your buy. So where would you buy at? Where would you have bought at on this bullish breaker? So remember,
on,
it broke out above it strongly, and now according to his teachings, you're waiting for price to come back down into the breaker to be a buyer.
yeah.
So where would you buy at? Where would you have bought at?
But I don't understand. I don't
I'm saying,
understand.
where would you have placed your buy at on MT5 since you understand that if price breaks above the bullish breaker, you're waiting for price to come back down into it before you buy.
I'll go to lower time frame.
So I'm saying, I know, but where would you have bought at? Like, just show me hypothetically, where would you have purchased? Where would you have put a buy at on
Okay,
MT5?
okay, okay, okay.
Where would you have done it at?
Um,
Which candle? So remember, price came. Just backtrack. Just backtrack. Price came down with the red candle, and you're like, okay, so you remember you're thinking like, okay, I should be a buyer inside of this breaker according to his teachings.
yeah.
So let's just. So which candle would you would have bought where? What would you have just bought at? Remember, you would have put a stop loss somewhere, so it don't matter if you were wrong. You still would have won the trade if you use his risk management stuff. So where would you have purchased that? I'm just trying to see where would you have purchased that.
Okay, if I was to do this, I could maybe yeah. Based on what
Okay.
I was based on
Okay.
what
And
I
where would the stop loss be at?
stop loss will be directly
Below the breaker.
near the breaker. Yeah, possible.
Exactly. It'll be right below that candle, or maybe a little bit below it. So now, what would your first TP be? Your take profit be? So if you bought right there, what would your first take profit be?
Into the next high.
Right. And
Oh,
so where's the previous high at?
this one.
Nope. Where's the previous high at? Remember, you bought down at the breaker. So where's the previous high at?
This.
Nope. Where's the previous high at?
This high.
Nope.
Ha.
Where's the previous high? The previous high is the high that was made right before it went down into the breaker and where you purchased at. So where's the previous high at?
The high that was made.
It made a high before it went down into the breaker. So where's that
This
high?
high.
Exactly. So all you would do you would put on like 3 positions inside of that breaker, and then your first partial would be at that high right there. You
Uh,
see where that move, that's like a little scalp right there. How many points is that?
let me see.
Pull out the measuring tool right there under the smiley face, and go ahead and put it where the buy would have been, and then put it to the high. Okay, so that's 40, 35 points right there.
85 points.
That could have
Yes.
been a scalp right there. That's Tuesday that's the afternoon session.
Yeah.
You could have waited and been done for the day. So that's basically answering your questions. That's the bullish breaker, and the bullish
Mm.
order block. I mean, and it's important to mark up both of them at the same time. Like I just showed you a bullish order block inside of a bullish breaker, and I showed you a bearish breaker inside of a bearish order block inside of a bearish breaker.
Yeah.
You know, and so those are the only questions you had, right?
Yeah. Those were that was a major
Yeah,
issue.
yeah. The propulsion block thing, man. Let me see. I have some notes on it. I need to use it more. Still should use it more. I'm still trying to figure out more of it myself. But let me look at it. I actually took some notes on it recently. Hold on, let me just see before I let you go. Let me see if I can find. Okay, propulsion block. Okay, so it says still bullish if mean threshold is not. Okay, yeah. So this is what I'm saying. Like I'm looking at my notes, and I'll send you the screenshot. The way the propulsion block works, from what I understand in my screenshots, is that it should, if it's really bullish, then it shouldn't. When the candle closes back down into it,
Yeah.
It shouldn't go past mean threshold. Okay, so let's go back. Let's find a propulsion block. So let's keep scrolling to the left,
To
and
the
then
left.
we'll do this, and then I'll let you go. So let's keep scrolling to the left. What time zone are you on? 1 hour?
1 hour.
Uh, Go to the 4 hour. It may be a little more. It may look a little better on the 4 hour. Yeah, let's just keep scrolling to the left until you see a propulsion block or what you think is a propulsion block. Now remember, the propulsion block is a down closed candle closing into a. There's one right there. Stop right there. Where's the propulsion block at?
This one.
So, but that's the order block. So where's the propulsion block at?
This.
It's the last down close. It's a last down close candle that closes into a bullish order block. So I'm about to show you how to do this, and then I'll let you go. So that's the propulsion block right there. So go ahead and mark up the order block first, and then just put a just get a trend line, and just put on opening price of that order block right there. Now this is how ICT teach you. If you see a real stubby, go ahead and get the trend line. Get the trend line.
Yeah.
Mark up the order block opening price. You got it on Fibonacci. You got to click on trend line.
Ah.
So click on trend line. So you see that last down close candle right there. Listen, when it's you see how short you see how short the wick is. Where's the last down close? Where's the order block at? Where's the order block at? Hold on. So just before you mark it up, just point to it? Where's the order block at?
This.
Okay, now where's the propulsion block at?
Portion block should be this guy.
Exactly, that down close candle. This is a perfect propulsion block. Now remember, I'm looking at my notes. It says propulsion block is still bullish if the mean threshold is respected. So we need to mark up this order block, and we need to mark up the mean threshold to see if this is a real propulsion block. So go ahead and go ahead and get the trend line and put it on opening price. Put it on the opening price of that order block. Now, if you see a short wick like that, ICT said just mark up the opening price. So
Okay.
mark up the opening price and drag it to the right. Okay, so we need to make that a solid line, and we need to make it a green line. I don't, yeah, I don't know what kind of computer you said, but like I said, you got to go to Amazon and get you a $5 or $10 mouse.
Mouse.
Yeah,
Yeah.
because you're not going to be able to, because those lines, it can't look nothing like that if you actually putting real money on the line. So, I mean, but yeah, so we need to make that line solid. Like I said, all you got to do, even if you're using your computer, I know it's a little difficult if you hold down shift, but I mean, that's when you get an actual mouse, you'll see how easy it is.
Yeah.
Yeah. So right now, you just eyeball it. If shift not working, then just try to make the line as straight as you can, just eyeballing it. Yeah. So okay. So that's the opening price. So go ahead and label it bullish order block opening price 4 hour chart. So when you just put OP, just put plus sign OB, and then put 0 dot P dot. It could be a small O and small P. Yeah. Yeah, small O, small P. So this is letting you know this is not a zone, because remember the zone is three important areas. This is letting you know that it's a short wick, and the opening price is all that's need to be marked up. So now go
Ah.
ahead and put the Fibonacci on the body and find the mean threshold. So and then you about to see what the propulsion block is. So get the Fibonacci and let's find mean threshold of the 4 hour order block, and make sure it's on the body high and the body low perfectly. And then then all you got to do is clone that line that you just drew and make it a dash line, and then label it mean threshold. So put it on the bodies. Okay, now scroll to the right and then click on the green line and then just clone it and then drag it down to mean threshold. or you could just get another trend line, whichever one is easier. Yeah, and make it a dash line, and then label it mean thresh plus sign OB MT, and yeah. Wow, this is crazy, man. Like I said, that propulsion block thing, I need to look more into it myself. I've watched the videos at least 10, 15 times, but I haven't actually used it. So,
Mm-hmm.
but this is a perfect example of it. So, this is a perfect example of the propulsion block.
Yeah.
So, what is a propulsion block?
Proportion block is when a, a down close candle dips into another block.
And it
Um,
doesn't take, and it
it
doesn't
doesn't
take
cross the mean threshold.
exactly. If it, like ICT said, I'll send you the screenshot. It said, he said, if the mean threshold of the bullish order block is being respected by the propulsion block, then we're still bullish. If it don't, then that let you know that we're going to go lower. It still may go up a little higher, but it probably won't take out that high. So you see right here, go ahead and mark that up as a propulsion block. Go ahead and get your call out. You know where the call out thing is?
Please
It's on there somewhere. It says call out. Click on it.
call
Click
out.
on it. Click on the arrow. Go to the next one. It's called call out. Go to the next one. Next one up. Yeah, it's probably call out. Comment. It's either comment or call out. Go to the right. Go to the right and click
This
on comment
now
and
this.
call out right there. So go ahead and call out that candle and go ahead and label it propulsion block. So just click right there and then scroll to the right and then say this is a propulsion block, 4 hour propulsion block. So you can know. I actually need to remember that as well because it's something that I don't remember all the time, but I need to. I know what I'm going to do in my mind when I think bullish order block. I'm going to think propulsion block as well, or bearish order block. I need to think propulsion block. So yeah, that's not how you spell propulsion, but you can fix it in your own time. But you see what I'm saying? But that's what he said. He said that's what the propulsion block is. He said if it respects the mean threshold of the higher time frame order block, then most likely we're still bullish. And you see that's exactly what happened. And even when price came back down on that green candle right there, it still respected what mean threshold. You see that move that propulsion block thing. Just move it up so you can see that when I'm talking about with that green candle. Yeah, you see when the green candle, that long wick, you see how it came back down there?
Yeah.
It still respect the mean threshold. And that's why you see that huge push up. We got that huge push up. So cool, man. I'm going to stop the recording and let your guy know.
Yeah.
Me and
Definitely.
him need to talk. Maybe you need to talk with him and tell him to watch. I mean, does he already know about ICT